Santori is another kind of weird one, but it's interesting in my view just to talk about for a number of reasons. I'm not really sure what this guy was thinking, but he had a company, and he would say that he's paying himself wages each year for 4 years in a row, and then he would take it all as a note payable to himself, and then he'd say, well, it's actually a bad debt because my company can't afford to pay me. So he'd claim the credits on the wages that were never actually paid. And then he'd claim an A bill on the other side, saying, well, it's a business loss 4 years in a row. And I won't even get into specifics, but this is all wrong, what he's doing. Okay? Number one, he should have issued a T4. Obviously, the CRA denied the A bill, and they weren't sure like if it's really wages, because he didn't issue the T4 or whatever, or if it's an A bill. They actually let him claim the wages, believe it or not, but they denied the A bill. So he had to pay personal tax on it, and then he got his SR&ED credits. Realistically, and where I thought this, I mean, other than it's kind of funny, the lesson in here is that there is a method in the SR&ED process to claim wages that are incurred but not paid, unpaid wages. And I find a lot of practitioners miss this. So what happens is a scenario where you come to work for me, you're a bright software developer, I started a new company, and I can't afford to pay you what you're worth. I say, look, you're worth 10 grand a month, but I can only give you 2 cash, and I'm going to owe you the other 8. And believe me, when this product takes off, I'm going to pay you your money and interest, and this happens all the time. Oh, okay, let's try to work together and build something, and then pay me when the money comes in. Now, what happens is, the proper way, assuming you were doing SR&ED the whole time for 12 months, is that I paid you $24,000, which I should get my shred credits on right now, but I owe you another $96,000. Right? I owe you that ultimately I'm going to have to pay for this SR&ED work that you did. And if I ever want to get paid on that, I have to claim the work in the current year. So I have to describe in a project what you did worth the whole 120, not just what I paid you plus what I owe you. The CRA has the right to come in and review whether that 120,000 is all reasonable or whatever, and deny any portions that they don't agree to. But once I've done that, does anyone know how I disclose that other $96,000? Well, that's a follow-up, but I'm saying for SR&ED purposes. Yeah, it's a 78 sub 4 deduction. Anything you don't pay within 180 days, you don't get to deduct.
But you also don't get a deduction if it's not paid within 180 days.
That's correct.
As wages either.
That's right. Now, for the SR&ED, getting back, there's a line. If you read the form, you know, wages, specified wages, non-specified, and then you'll see line 315. A lot of people don't know what it is. It's a number that goes there, but it doesn't actually form part of the pool. It just carries forward. It says, wages incurred in the year but not paid within 180 days. And I use this as an anti-avoidance provision, but I use it as a planning tool. Hey, you just left your job in industry where you're making $200,000 a year and you started your own company and you're paying yourself $1,000 a month. And you're working night and day, harder than you ever did. Chances are, you're still worth $200,000 a year. In fact, you're probably worth 5 times yearly maximum pensionable earnings, which is the most you're going to get. You're worth $232,000 a year, let's say. So let's say I paid you $24,000, and I owe you another $212,000 to bring it up to the maximum. I have to put this $212,000 that I owe you on line 315 with my T661 form. CRA has a right to review not only wages I paid you, but the other $200,000 that I say I'm going to pay you or myself for the SR&ED, and that the SR&ED was valid and they agree to it. If at any future year I can show that I'm paying you the back wages, which is basically I made my remittance, the T4 remittances that I owed you, there's another line that says amounts previously denied under 78 sub 4 in another year, paid in the year, and I get my credits on it in the current year. The only corollary is it loses its inherent nature of wages and just becomes a qualified expense, so I don't get proxy on it. If I've done the proxy, I lose my proxy. I just get the wages back in. But my point being that that's actually an anti-avoidance provision which can turn around, and a lot of clients who can't afford to pay themselves what they're worth can still accrue what they're worth, and ultimately, if the product becomes successful in a future year, and I say, here's the $600,000 for the prior years, I can't claim $600,000 in a year as a specified employee. I have a maximum of roughly $230,000 a year, but if I've accrued it, I can start paying all the back wages and get all my credits.
The upside to that is, of course, you've got to show it on your statement. as a liability and on your balance sheet, and they impact on your mortgage.
Well, this is a fantastic point. So one of the point here is, yeah, but I'm messing up my current ratios and my whole balance sheet and everything. And I've had a client in that situation, and here's what we did. We went to the bank and said, the bank said, oh, you violated your covenants. And we said, well, what if we put a covenant in here that says the amount owed to this guy will never, ever be paid until we have your permission? He said, oh, well, that's totally fine then. If we know, and it's primarily for tax purposes. The bank loves that. If we can help you do something that doesn't cost us anything and helps you for tax, yeah, we'll help you on that. But you have to actually inform the bank of what you're doing. You have to agree that you're not going to pay any money out, so it's not going to affect their security. And they're generally pretty happy with it. But I would agree, you have to communicate with a large number of people, particularly if they're financed, to get that through. Yes?
Does that qualify for specified wages? That 315?
Absolutely. Any wages. If it's specified, I'm not sure if it affects the cap at that point. So specified employee would be 5 times YMPE is the max you can claim in a year, right? Roughly 230,000, 240,000. It goes up each year. All right. Okay, so I mean, like I say, this one's kind of funny, but I think it illustrates a neat scenario that a lot of people miss, which is guys starting out a company where they don't have a lot of money, they're living off their life savings. There's a big opportunity to accrue reasonable wages for them. And ultimately, years down the road, when the company starts making money, to pay the back wages and get at least part of the SR&ED credits that they could have had. Okay.